Good morning. Welcome to Top of the Morning by Mint, your weekday newscast that brings you five major stories from the world of business. It's Friday, May 9th, 2025. This is Nelson John. Let's get started. In one of the most intense air confrontations in decades, India's air defense systems went into overdrive on Thursday night, shooting down multiple Pakistani aircraft, including an F-16 and two JF-17s after Pakistan launched coordinated strikes across Jammu and Punjab. Government sources confirmed that India also took out a Pakistani Airborne warning and control system, AWACS, inside Punjab province, which is a major blow for Islamabad's battlefield intelligence capabilities. The skies over Jammu and Kashmir and even Rajasthan saw a swarm of drones. Kamikaze drones were intercepted in Poonch, while others were shot down near Anknoor, Udhampur and Jaisalmer. One drone managed to strike the Jammu civil airport, triggering a rapid scramble by fighter jets. 8 Pakistani missiles were also intercepted over key areas like Araspura, Arnia and Samba by India's S-400 defense systems. No losses, the threat neutralized, said a statement from India's integrated defense staff, calling the response a textbook execution of standard operating procedures. In response to Pakistan's unprovoked aggression, India enforced blackouts across border cities and unleashed a coordinated counter-offensive, neutralizing key air defense assets and preempting further strikes. This wave of attacks comes just 2 days after India's Operation Sindoor dismantled terror camps in Pakistan and POK. With both sides trading missiles and drones, the region stands on edge, watched closely by a world wary of two nuclear neighbors slipping into an open war. As tensions between India and Pakistan spiraled into a full-blown military face-off, the stock markets blinked, if only for a moment. On Thursday, in the final hours of the trade, news broke of Pakistan's military attack on 15 Indian military sites, all of which were thwarted. That was enough to inject caution into an otherwise resilient market. The Nifty closed 0.6% lower at 24,273, and the fear gauge India surged over 10% to 21.01, signaling heightened uncertainty. The biggest red flag? The put-call ratio. According to India charts, the Nifty PCR hit a record high of 1.89, its most cautious reading since April 2021, suggesting traders scrambled to buy downside protection. Yet by day's end, sellers of puts retreated, pushing the open interest PCR down to 0.86, which translates to nervous traders that didn't want to risk holding positions overnight. Still, heavyweights like Mirai's Swaroop Mohanty and Kotak's Nilesh Shah believe any conflict will be limited. For long-term investors, volatility may be just a buying opportunity. But for now, the markets are watching and waiting. Adani Group is making a big bet on Bhutan's rivers. The Indian conglomerate has inked a major MOU with Bhutan's Druk Green Power Corporation, DGPC, to jointly develop 5,000 megawatts of hydropower capacity in the Himalayan kingdom. Signed in Thimphu, this deal builds on their existing partnership in the 570 to 900 megawatt Wangchu hydropower project, where DGPC holds a 51% stake. This partnership reflects to our deep commitment to clean energy and regional security of energy, said Naresh Telgu, COO of Adani Green Hydro. DGPC's managing director Dasho Chewang Rinzin called the collaboration a strategic move that strengthens Bhutan's already strong ties with India. It also aligns with Bhutan's renewable energy roadmap, which targets 20,000 megawatts of capacity by 2040. Beyond hydropower, the roadmap pushes for diversification into solar and geothermal and strategic partnerships. As part of the deal, Adani will integrate the projects into India's commercial power markets, ensuring reliable offtake and boosting regional trade. With India's NHPC and Tata Power also eyeing Bhutan's clean energy gold mine, this move sets stage for a hydropower boom in South Asia, with Bhutan at the center. Donald Trump is back on the trade war path, or trade peace. Depends on how you look at it. The US president announced he'll reveal details of a major trade deal at a news conference in the Oval on Thursday. Trump did not name the country, but all signs point to the United Kingdom. According to reports in the Financial Times and Reuters, the UK deal may come first and could see both sides easing trade tensions. The UK might drop its 2% digital services tax, while the US could lower steep tariffs on aluminum, autos, and steel. Trump's top trade advisor Peter Navarro told CNN that talks with India also remain in the mix but could be delayed due to a twist. Trump, true to form, made a bold declaration on Truth Social. Quote unquote, "The first of many," he claimed, "countries are lining up to ink deals." Markets seem to like the drama. S&P 500 futures edged up 0.5%, while a 145% tariff is still in place on Chinese imports and no talks in sight. The road to global trade peace remains rocky. Starting May 16th, catching a flight from Mumbai's Chhatrapati Shivaji Maharaj International Airport is going to get pricier. The airport's Economic Regulatory Authority, AERA, has approved a hike in user development fees, UDF, for both domestic and international passengers at the Adani managed airport. For the first time, domestic travelers will pay UDFs 175 rupees on departure and 75 rupees on arrival. That's nearly 50% lower than what the airport had originally proposed. International passengers, however, will feel a sharper pinch. Business class flyers will now shell out 695 rupees for departure and 304 rupees for arrival, while economy passengers will pay 615 rupees and 260 rupees respectively, more than double the current rate of 187 rupees. Why the hike? AERA says it's all about the user pays principle and better facilities. Meanwhile, landing and parking charges for airlines have been kept lower, with domestic aircraft paying 402 rupees per metric ton. The timing, though, is tricky. Terminal 1 is set to be demolished and rebuilt, leading to a projected dip in domestic passenger traffic for FY26 and FY27. But Mumbai Airport expects a rebound once the new terminal and the upcoming Navi Mumbai Airport are operational. That's all for today. Thank you for joining in. We're eagerly looking forward to our next Top of the Morning episode, which will be packed with the latest in business news. Until then, this is Nelson John signing off. Have a great day.